Okay, good morning, everyone. Thanks so much for coming. So today we will start a new chapter, which is national income account, right? So just give an overview where we are. So we are in the second module. In the first module, we have reviewed principle of microeconomics. Now we are in the second module. In the second module, so our main task is to understand a measurement. So here is a measurement to macroeconomy, right? So the way to understand that is just pretend we are in medical school. Okay, so we are training for doctor. And then so in the medical school or in terms of to become a doctor, the first thing we need to do is to understand how to measure the vital of the patient. Similarly in macroeconomics, okay, so we are doctors for our macroeconomy. And then so we also need to understand how to measure the vital of our economy. Okay? This is going to include GDP, price, labor market. And then so in this chapter, we will focus on GDP. Okay? And here is a roadmap of this chapter, right? So we are going to focus on understanding how we measuring GDP. Okay, and this GDP is going to use to track the performance of the economy. And the GDP is also going to use to comparing one economy versus the other. And after that, so we are looking at the difference between real GDP and nominal GDP, and look at price index and inflation. Okay. Before I show you the scenes, okay, and we should ask questions or the kind of the motivation questions. How do you measure an economy? Right? The example is like in 2010, in the newspaper, the headline says China passes Japan as second largest economy. What that means, right? So actually, I can share a piece of newspaper I read recently. Where are we? Okay, Wall Street Journal, right? So recently, Wall Street Journal has a report says China is only major economy to report 2020 growth. What does that mean, right? So how we understand, so this is a major economy, and how we understand, so this major economy is reporting growth. So if we say an individual is reporting growth, and then maybe say, okay, so this individual is gain height and gain weight. But how we understand an economy is growing, right? And particularly, so people are talking about, so given the growth trend of Chinese economy, we may expect so Chinese economy becomes the largest economy in 10 or 20 years. But again, how we understand that, right? So this is similar to the question I just showed you. Oh, okay, so China surpassed Japan in 2020, becomes the second largest economy, and then so maybe in 10 years time, so China becomes the largest economy, surpassing US economy. But what that means? Do we need to worry about that? How we understand that, right? So those are the things hopefully we have answered in this chapter, right? Long story short, so the way we comparing one economy versus the other economy is by comparing the value of their production. Or in other words, like the newspaper, the news I just shared with you, we say China economy grow in 2020, essentially means the value of their production was growing. Okay, and then so you may look at other reports says so U.S. economy is projected to have a strong growth in 2021, and similarly, so we are saying our economy is going to grow the value of production significantly in 2021, right? And then so the value of production, so we are going to use GDP, which is gross domestic product, to measuring the value of production. Okay, so that is what we are going to discuss in this chapter, right? So just give you a background, what is GDP? So this GDP is coming from a national account. What is national account? The full name is national income and product account. Okay, so first of all, this is a accounting system. But this accounting system is for national economy. It's not for a company, right? So understand, so we have students who study accounting or who is an accounting major, and you learn, so there's an accounting system for a corporation. But here we study the accounting system for a national economy. And so beside that, so this account is for national income and product, right? So this NIPA stands for National Income and Product Account, will be used to measure our nation's economic performance. Okay, and then so we can use this NIPA account to compare American income and output to that of other nations. So for example, we can compare US versus Canada, US versus Germany, right? And furthermore, so this NIPA account help us to track the economy's condition throughout the business cycle. Okay, and then so we can understand whether we are in an expansion or we are in a contraction, which state we are in business cycle. What should we do as government policy? Okay, so you can see, to understand the GDP is vital important to understand health of the economy. Okay. So before I show you the details of how this account works, so that we can measuring the value of production of the economy, so I need to introduce a few concepts, and then so I'm going to use a flowchart diagram to help you understand how we do the accounting. Okay, consumer spending, essentially household spending on goods and service. So for example, you purchase a internet subscription, okay, and you go to grocery store, and you take a vacation, and you come to UNO for a degree, right? You pay tuition. All those things are considered as consumer spending. Okay, consumer spending actually is largest item in GDP. Okay. Now the second concept is stock. Stock is a share in ownership of the company held by a shareholder. Like say, for example, if you invest in AMC, right? And so that just means you own a share of AMC. Okay. Bond is borrowed in the form of I own you that pay interest. What is bond? So the most common bond is treasury bill. Okay. So essentially, it's I own you issued by US federal government. Okay. So the reason why the US Treasury Department want to issue I own you is how they borrow money to finance the spending. Right. So this is bond. But both stock and a bond, they are financial assets. Okay. Next one, government transfer. Government transfer includes payment by the government to individuals for which no goods or service is provided. So the example is food stamp, unemployment insurance benefit, or recently, so the government sent us a check due to the COVID pandemic. Right, so those are government transfer. So there's a related concept, which is government spending or purchase of goods. So for example, so the state government decided to renovate I-80, part of the I-80. Okay? And so that is not a government transfer, that's a government purchase of goods and service. So the government essentially purchase service from private sector to repair the road. The last concept, disposable income, which is the income you receive plus government transfer minus tax. Okay, so that's the net income at your disposal. So you are free to consume or to save. Actually, for each dollar you have, so you either save or consume, right? And someone may say, okay, so I can just donate that money. But in some sense, that is your consumption, right? And then somebody else say, oh, so I'm just going to leave my money in a shoebox. So that's considered as safe. And then the other person say, oh, what happens if I lost my money? And then so typically we say that's consumption, right? Okay, so given those concepts, now we are ready to understand our macroeconomy. And so our main task here is to understand how we measure the value of production. Okay, and where we start? We are starting with model. Remember, so in the introduction, I told you, so we will use models to represent our world. Why we do that is because so the real world is so complicated. Okay, and so we will lose our insight by directly see the actual world. Instead, we are going to use a simplified representation. Okay, and so here, so the way we simplify it is we start with two agents and two market. Okay, and who are those two agents? So in reality, so there are millions of individuals. There are millions of business or economic activities. Okay? And then we sort out every business either is a household or is a firm, right? Oh, by the way, here we start with simple. So at the moment, we abstract away from government. We abstract away from international trade. But later, I will add them back. Okay, let's start with simple. Households versus firm. And then there are two markets. One is a market for goods and a service on the left-hand side. The way you understand that is essentially this is grocery store. Essentially, this is Amazon. Okay. On the right-hand side, we have market for factor. What is that? So essentially, that is the labor market. That is the market we exchange financial assets. Okay. Now let's see how we interact. So in this market, so households will spend. Okay, so household has some income, but I'm going to explain to you where the income coming from later. Let's say, for example, households has some money, then they must spend. So where they're going to spend, they'll go to grocery store, log on Amazon to purchase goods and a service to satisfy their need. Okay, and then where does the goods and the service coming from? The goods and the service are produced by firms. Okay, these firms include traditional firms, like those produce meal, produce food, produce gasoline. Also include those firms produce virtual goods, like Facebook, Snapchat, okay, Robinhood. Okay, so those are the firms. And remember, so what is GDP? Even though I have not given you the formal definition yet, but the GDP essentially is the value of our production. Hence, if we track what was produced inside here, we get GDP. Okay. On the other hand, so this is a simple economy. As I just mentioned, no government, no international trade. And furthermore, there's no saving, meaning all the money will be spent in this market. And all the goods produced will be sold. Hence, we can also look at how much we spend here, right? So how much we spend here must equal to how many goods we produced. Okay, now finally, so the firm, they produce, they have revenue. But then, so the firm must pay the following things so that they can operate. These include wage, which is a cost of hiring labor, interest, which is the cost of hiring capital, rent, which is the cost of using the machine, the building, the land. And finally, there may be some profit left. But remember, firms, they are owned by someone. But who owns them? Households. Okay? And by the way, so who provide labor? Households, those human beings, right? Because firm here, they're just legal entity. Okay? And then who owns the interest? Households. So toward the end, you can see all the money the firm makes by selling the products in the market for goods and service will return to households as income. Okay, and then so in some sense here, this is product. We measuring all the goods and service we produced. And here, this is expenditure. We measuring all the goods and the service we purchase or we spend on goods and service. And lastly, here we look at income. Okay, and given this is a closed loop, so these three things will give us the same number, and all of them will give us the value of the good and the service we produced, right? So this is the simplest possible way to understand our economy, the simplest possible way to understand how to measure the value of a product. Okay, now, so we will add into more realistic things. Okay, so where we are going to do. So first addition to the picture here is introduce government. Okay, and what role the government will play? The government will collect tax. With the tax, the government is going to offer some transfer to households. Again, like food stamp, unemployment insurance benefit, social security. Okay? And then the government also purchase goods and services from this market. Okay, I'll give you examples. National defense, Medicare, which is healthcare for elderly, public education, okay, R&D, like recently the government purchased vaccine for COVID-19. Okay, so those are the government purchase of goods and the service. Okay? So that's the government's role in this market. Now, again, so given this addition, how we are going to understand? So we still have three ways to look at GDP. One is product. And here is income. And here is expenditure. And so in terms of product approach, or the way to measuring product, nothing changed, right? Because the government simply just purchase goods and service. And in terms of income, no, it's the same thing, right? Because we generate income from this business, right? And finally, expenditure, yes, it changed, because not only households spend, the government also purchase, right? So this is the first addition. Now, we are going to add financial market. This is because, so in reality, the households not only consume, they may also save, right? So now let's see how that affects the picture. First, the government may borrow. This is just in case the tax revenue is not enough to pay for transfer and the purchase of goods and service. Right? Like, say, for example, right now in the Congress or in the federal government, so they are debating about this 1.9 trillion stimulus. Okay, so this 1.9 trillion dollars is a huge amount. Certainly, the government don't have enough tax revenue to pay for this extra 1.9 trillion. Where the money coming from? They must borrow. Where they borrow? From financial market. And then so you may be wondering, where the money of the financial markets coming from? The answer is coming from saving. Okay? We call it private saving. Okay. And so the financial market, the money is the financial market. Okay. Not only goes to government, sometimes the private business, like firms, they may also borrow. Okay. So they borrow in both bond, like I own you, and in the form of stocks. Okay, so this is the financial market. But now, so what is going to affect? So this is going to affect the income, right? So this is going to affect here. So when we calculate the GDP, okay? So we will see an example later, right? Well, by the way, so the firms, they borrow, so they may use the borrowed money to do investment spending. But what is investment spending? So essentially, firm also participate in the market for goods and service. Say, for example, so Apple is going to purchase another building, right, to expand their production. So that's considered as investment. Okay. Finally, we add rest of world. Think about this EU. Think about this China. This is Japan. This is Mexico. Okay, what the rest of the world enters the discussion. So the rest of the world is going to purchase goods and services from us. This is called export. Okay, in the meantime, we may bought some goods and services from the rest of the world. Okay, so this is called import. But remember, so these two numbers not always equal to each other. If import exceed export, meaning we spend too much. Okay, and then so how we are going to finance this additional spending? So we are going to borrow in the international market. Okay, but literally we borrow from foreigners. On the other hand, so if we export more than we import, and then so we have surplus, meaning so we have additional money. This is in foreign currency. And then so we are going to invest in foreign companies. Okay, so that finish the big picture. And from this big picture, so hopefully you understand how we can measuring the value of goods and service we produced. To summarize, we can look at product, and we can look at spending, and we can look at income. All right, this is a closed loop, right? Either whether this is without rest of the world or with rest of the world. So this is a closed loop. Okay, so that is why these three numbers will add up equal to each other. Okay, so now in the following slides, so I'm going to give you some further explanation, but that's largely based on the figure we just showed. Okay, let's take a short break and then we continue this discussion.